Hey, it's David. I hope you're doing great and having a good start to your new year. This is going to be a more comprehensive overview of where we are in the market, current trends we're seeing, what we expect in 2024, and some areas of town that are of interest and where buyers are focusing their energies and that sort of thing. So if you're interested in kind of an outlook on what's going on, we're going to dive in a little bit deeper here. And if you have any questions, let me know and we'll go from there. First of all, January 2024, we are off to a strong start. Buyers are more active. The pent-up demand from 2023 is starting to show itself. And so our showings are running into other agents out there that are showing properties. We're having to schedule our properties more diligently in terms of our property touring. We have to coordinate our showings between other showings and that sort of thing. So the buyers are starting to come back out. They are interested in taking advantage of the stability and the anticipated rate drops in 24. Because if you buy a house now, even if you're at 6.5% or whatever, and the rates come down, which we do anticipate, you can refinance it over the next couple of years and take advantage of getting it priced in 2024 as opposed to 2025 or 6 or 7 pricing. I've got some other information on the value of doing that as opposed to renting, another video, which you can find in our YouTube. That's the buyer side of things. Seller side of things, our sellers are definitely getting ready for the spring season. We have several very nice listings launching at the end of the month or the beginning of March, and the other agents in our office and other brokerages that we're speaking to anticipate the same listing launches in early March and spring. As the buyers are more interested in buying, sellers are more interested in selling because they're seeing the value start to go back up and more activity with lower rates. So when we hear about the buyer's market, yes, it's more of a buyer's market than it has been recently, but we are still in a seller's market. So offers need to be well written. They need to provide value, need to be reasonable in order to have a seller consider the offer, especially in first weekend or first week or so. Here we're seeing that it is a seller's market. We've got about 2.7 months of inventory as of January. Our price of sale or sold to pricing is a little bit down, but not too bad. We're right around 96% of sales price. Typically, 3% reduction is a lot where I see it with our deals. There we are. And then we've got a median sold price of about $555. One interesting thing to look at is here, when you look at buyer activity and we look at pending listings, as you narrow down, you can see the purple are the most active areas in and around Austin. So here we're having 60 to 66 pending listings last month, a little bit less over here. As you get more core, it's getting more expensive. And so those pendings tend to go down. Windsor Park area is a very hot area right now with pendings, as you can see, up around the outskirts of Austin are very active. So if you're a buyer looking in these areas, you can definitely expect more competition than you may have expected based on last year. Buyers are out there. Pendings show the buyer market and how much activity buyers are having. So pending is a signal of market strength, and we're definitely seeing more of it. This is an interesting metric here just to look at over the past 3 years. We can see Austin, this is our median estimated value, and then we have the Travis County right below it, and then the U.S., and then Texas, which I found interesting, U.S. being marked slightly higher than Texas, generally speaking. But what you can see here is we are following the same trends as the rest of the state and the rest of the country in terms of price adjustments. We had a dip here, then it popped, and then another dip here, and then you can, of course, see where COVID did its number on the values. New listings coming on. We've got, of the new listings coming on, we have a median price point of $650, and we're going, all the way back to 2019. We can see where the trends were going up. We had our spikes and then kind of our settling, a little bit of a trough here, and then we're bouncing back. Once again, giving confidence to the fact that I think we are past our trough and that we're going to just continue to see values start appreciating at a typical rate again. I expect in Austin, it's going to be 5 to 6, 7% this year and then go up from there. Number of properties sold, you can see the typical seasonality here. December, January, it's the trough, and then we're spiking back up. So our trends in terms of properties being sold is maintaining. Our volume month over month from last year went up quite a bit, and the median size is up about 2,000 square feet. But all in all, I think that the trends are holding and that we're going to continue to see appreciation there. Active listings in the market. These are properties that are currently on the market and active. They are for sale. Again, we have a lot of people are under the impression that our inventory is super tight, but if you look back, we've got more listings now and a greater inventory than we've had previously. Now, a lot of that is centered around days on market because it adjusts the count, and so somewhat subjective, but there is inventory out there. New pending listings. This is a great metric because it again signifies buyer activity and market strength. And the median list price, we're up a little bit on new listings and what they're going on the market at. We're up in the number of properties over last month. So December being typically the slowest month of the year, we're seeing a big pop now in terms of properties already starting to come back on the market. Days on market are going down, and then our volume of active listings has gone up quite a bit. So for buyers, that's great news because more inventory, more choice. For sellers, it just signals some urgency to go ahead and get on the market before we hit the peak of it when the buyers have the most activity or the most choice. Here on pending listings, median price point of pending listings has gone down a little bit, month over month. Some of that has to do with more choice, but the number of properties pending, this is significant, is up almost 50%. And so between December, the properties that went under contract, in January, the properties that went under contract increased by 50%. Again, showing buyer activity popping up. The median days on market went up a little bit last month. That's probably just because people are gearing back up and price adjustments, but also choice, more time. And then sold listings. This is one where this is the metric that we largely look at to determine pricing, to work with our buyers on an appropriate offer, but also our sellers on the best place to price their home for a sale according to their goals, right? So what's more important, money or time, or a nice average of both is often where it lands. So here with the median price, again, if you look at this, on January 19, we were about 350,000. We've been creeping up since then. We had a peak in July of 21, a little bit of a trough, and then our great peak in May, where our median price point was 720. From there, we trended back down, but from a trend line, we are still in good shape. We had the bump of appreciation over COVID and we've settled. We've gone through price corrections and we're back on track and ahead of where we were had we not had COVID. We have less listings sold last month, and that's because less went on under contract in December. $8 to donuts, and next month we're going to have more sold, or February will show more sold than in January. Then the supply, months of supply, you can see here we've had quite a bit adjustment in supply, which is the biggest change we've seen and that it's held since COVID. And a lot of that has to do with simply the time it's taking to sell a home. We're back up more towards typical market, right? 60 days, give or take, as opposed to 2. When you have a home on the market for 2 days, even though many homes and plenty of inventory was coming on during COVID at the peak, they were turning so darn fast that it kept the inventory extremely low in terms of months of inventory. So we do have a higher amount of inventory as the numbers show. My opinion is largely due to time on market, because anecdotally we're showing homes to our buyers. We're seeing 1 or 2, 3 a week that'll come up that may be of interest, but a lot of homes that we saw the previous week are still there. So all in all, there is opportunity for buyers. It's a great time to get in. We are going to see appreciation continue. So even if you think the rates are going to go down, now's the time to buy because prices are not. And then in a year or 2, you can refinance. And then for sellers, it's a great time to get on the market, or at least prep to be on the market in the next month to 60 days, because your seller competition is going to increase, advantage to the buyers. So if you have any other questions, let me know. I'd love to dig in more on this for specific properties, or just if anyone wants to chat real estate. Otherwise, have a great afternoon and a great weekend coming up, and I hope you go do something fun. Thanks.